Hello everyone, good afternoon and welcome to Trading the US Open live here at the live trade room. Now today is Monday the 22nd of October, so without further ado, if I can just put up the presentation screen. I'll just put this up on screen now. So there we go. Just to explain what this session's all about then, what we look to do is we're professional traders. We trade the markets technically with real capital, so every decision we take in these markets can impact us adversely as well as positively. So you get to experience the whole trading environment. Now, we look to identify high probability trading opportunities, and we look to execute those trades with a high degree of consistency in our approach. And then when it comes to the management of trades, what we want to do is to be as disciplined as we possibly can when we trade these markets. So that would be looking to mitigate risk as quickly as we can, take risk off the table with a trade, or perhaps even look to book in profit if that market has moved considerably in our favor. And we look to, during this session, we look to cut our losers short if we get quite impatient with a market that's not performing as we would expect it to, and we give the benefit of that market time to move in the direction in which we want to trade it, all with one aim, and that's to book in consistent returns when we trade these markets. So just before we begin then, if we could start with our risk warning, please do familiarize yourselves with the risks involved in trading these financial markets, and take note of our risk warning currently up on screen. Okay, so before we begin, it's important for a trader when they approach their trading screen to have an understanding of potential market moving news. So for this, we shall bring up Forex Factory. I'll bring that up on screen now. And as you can see, we don't really have an awful lot of news to actually concern ourselves with. Now, there's ongoing Brexit negotiations. There's some significant geopolitical events, global risks that we need to be aware of. Global trade talks between the US and China have a real profound impact on these markets. We also have the midterm elections coming up in the US, so there'll be a bit of positioning going into that. In addition, we have Brexit negotiations. We have certain structural issues within the Eurozone with regards to Italy and the impact it's having on Greek banks, and so there's a number of issues. Plus, we have been in this lower rate cycle for quite some time, and now we seem to be coming out of that lower rate cycle with the Fed and the Bank of Canada, just to name but a few central banks that are in a rate increasing cycle now by the looks of it. So from an individual news perspective, we don't really have much to contend with. There's a number of RBA news events impacting the Aussie dollar very late tonight and early tomorrow morning, but that'll only be relevant if you happen to be trading the Aussie dollar. So without further ado then, if we can just have a look at some of these markets and see what's going on with them. So we've had a fairly constructive rollover to the downside. So we've seen some strength creep in to the dollar against the euro. So that's very likely to continue lower at this point, actually. So it will be worth looking at these markets, and we've had the pound dollar just break through these levels, and we've had sort of a nice move now. Certainly over the last couple of hours, we've had really strong move from these highs, and a nice sort of rollover to the downside. We are just about breaking below the weekly low, which is the 29.99, so it's the 130 level. We're now below that, so that is effectively quite positive for us. But a strong climb to the downside from these highs, so do bear that in mind. And it's looking like it's continuing lower, so it would be useful to just keep an eye on the euro and both the pound and the euro dollar and the pound dollar. The market that we are still currently in, and just to take you back, we were looking for a concerted break above the 112.77. We got into that at the 112.80 level, on the breakout to the upside. So we had to be nice and patient, and we're still in that trade. Let me take you back a bit more so you can see the potential. So we've currently broken these highs, which are quite significant. The weekly high is the 112.72. We're now above that level, and our stop loss is below the 112.72 and also the 112.67, and that's just quite important. So we've actually got a 15 pip stop loss, 15 pip stop loss in this trade. So we're quite happy to basically see if we can get this market pushing higher to the upside. So we've broken above the weekly high, the 112.72, and we really want to stay above that. So we do expect this market to continue higher. It's just obviously very slow in doing so right now. But we can come back to the yen. So that's a trade that we're already in. The dollar Swiss potentially looking like it's moving to the upside, the 99.78 level. Reluctant to break above that just yet, but we do have the parity 100 level just above it. Dollar CAD, we've got a strong bias to the upside in this market off the back of Thursday's price action. Wednesdays and Thursdays really strong price action. Friday a little bit more indecision, and let's see what happens in this market. So our bias for the time being is to the upside, but the opportunity is not fantastic for us right now, so do bear that in mind. The Aussie dollar, we've bounced off the weekly low, which is the 70.87. We've pulled back to the 7100 now, which is the current price. So we just need to see a little bit more from this. We've had a strong bit of strength creeping in to the latter part of the European Open, where we've failed to make these new highs and prices just rolled over to the downside. So we'll see. And we'll test whether some continued dollar strength continues to creep into this market. Now we have had the euro strengthening against the British pound, and that's responsible for this bit of price action here. Running into these levels of resistance, just around that, the 88.48 level, or the 88.50. To be more precise, is kind of the strong level of resistance in this market. So let's see how we get on with this market. We do like, and what we've seen really is a little bit of yen strength to creep into the British pound. So we're getting some mixed pictures across different markets, a mixed bag. So there's a hierarchy of strength and weakness, and sometimes working out that hierarchy isn't the easiest thing to do. It's the dollar is strengthening against the yen. The yen is strengthening against the pound. The pound is selling off against the dollar, so it does add more momentum to the downside for sure. And the dollar is strengthening against the euro. So there is dollar strength in this market, but there is a little bit of yen strength as well. And the reason why we can kind of reinforce that hypothesis is if you look at the potential strengthening of the S&P 500. So that's getting close to finding a bit of support around this 27.77. We had a bit of a rollover to the downside, which is now kind of reversed, and it's looking on the stronger side once more. So sorry, I digressed just a little bit. Not much happening. Both markets are cancelling each other out at the moment, so it does underline the fact that yes, the yen is strong, but the dollar is strongest. The yen and the euro are then the next strongest pairs, and the yen and the pound seems to be one of the weaker currencies out today. So let's see if we get some continuation in that market. We've had the gold roll over to the downside, so again a few days of indecision on that, so we're happy to just step back from that as things currently stand. We were looking for opportunities to actually buy the oil market, but it needed to break above the 69.88, and we never really truly got that breakout. So as things stand, we'll have to be a little bit more patient with this market now. Same situation for the UK. oil market. Looking at the global equities, there's a strong potential move to the upside, except we haven't seen much movement since early this morning. Same situation for the Dow Jones and the Nasdaq. So looking at this price action, we're likely to get continuation to the upside. We just have to wait and see whether we do get that potential move. We have the pound creeping lower, which is likely to support the price of the FTSE market. So this could be an opportunity for us to push these prices higher if we can get in on a pullback, just purely from a technical perspective, and not much to see really with the Euro stocks. So if we buy the FTSE market, it's because there's strength coming into the global equities and the pound is selling off quite considerably against the dollar. So this is the price action that we're seeing. We're seeing potentially kind of a double top, a little bit of spike as well, a little bit of rollover. We've attempted to break higher and then we've now flushed to the downside. So not the easiest of price action to trade by any great extent, but we are now below the 29.99, which is a structurally important level, and it is the weekly low. So now we want to see if we can capitalize on any pullbacks in these markets. So that becomes our challenge now. So what we might do is just keep an eye on these markets, and we'll come back to these shortly. I'd like to just split the foreign exchange markets into thirds, just on the left hand side here. So you can see the intensity to the downside of both of these markets actually since the European Open. So there hasn't been much opportunity to buy or sell structural failures. It's a little bit of a linear move, a little bit of potential upside pullback price action there, but nothing substantial. We've continued to roll lower, and the pound yen, which is the market that we're currently in. Okay, so those are our currency pairs as things currently stand. We're still quite happy to be in this market. If we break these highs, we can use this level here to take the risk off the table with this trade. So being conscious of risk management and trying to mitigate that risk quickly, but as quickly as possible, but giving the trade some space as well is quite an important consideration. So the other markets that we're looking at, we're going to forego the gold market for just the short term. The S&P we could look at in the bottom right hand corner to see if we start getting more strength, and you can see the 27.77. that was a level we put in there this morning, and that level is still intact. We're kind of at that level as we speak. We'll keep a close eye on that yen trade, and the final market really, which we look at the top right hand corner of the screen, is the FTSE 100. So here's your previous highs. So let's look at it on a daily time frame. So we're suggesting that this market is extended lower, and we're just bouncing off that level. So it's a counter trend trade, but it can give us a little bit of a push to the upside. So what do we want to see happen? We'd like to see this price just bounce back somewhere in and around these levels here to see if we can capitalize on the move to the upside. So it's a bit of a pullback trade. To signify that pullback, we can just lead the price into this kind of area in here and expect it to continue to the upside. So we shall very much wait and see. So we definitely want a pullback that we can work with. Definitely seems like there's a bit of yen strength creeping in as well. Let's have a quick look. See, this is not great price action to get into to the downside, having made new highs up here. So you're waiting for that next opportunity to maybe get a little bit of a bounce, and you never get that. It just keeps slipping lower, and then this is your structural failure to the downside on a 15-minute time frame. So there's a sell trade from a structural failure probably about an hour ago. So now we're just waiting for the next pullback effectively to see if we can get into it to the downside. So maybe one to watch. Okay, so let's see if we get a bit of a pullback in this market, and maybe we can change our bias to the downside. Maybe that's worth doing. So this actually constitutes, on a 15-minute time frame, a bit of a structural failure to the downside, which is probably why we've seen a little bit more momentum to the downside in the last sort of half an hour. Still very likely for a considerable amount of support creeping in around the 112.72, which is where the price is currently at. So we're currently experiencing a pullback in the dollar yen, and the euro dollar and the pound dollar just shifting over to the downside. We want to see a little bit more of a pullback. So really, with this type of session, we want the markets to perform in a way in which we want them to perform. And if it doesn't, then it allows us to kind of back off from the trade idea. So it's only if we get those opportunities, if they arise. So let's be very, very patient. Hi Renko. You're thinking of trading the DAX. Do you have any tips? Yeah, very volatile, very good market to trade. We normally trade the DAX market ourselves. In fact, I'm just going to post a little message now just to get an update on the DAX, because I'm due an update. Yeah, there was some issues with the DAX contracts and the exchange in terms of the access to the DAX market, but apparently it's very shortly coming back online, so we will be adding it to our European equities shortly. So yeah, look, I've just wanted to just follow that up so we can add it hopefully shortly to our list of European equities. It's a very good market to trade. Do we have any tips? I suppose it's the thing is about the equity space is that it can often be quite correlated. So you want to keep an eye on those correlations if trading global indice markets. And there's definitely days when you get strong positive price action across US and European equities, where there's a flood of capital into those markets, and it does give you some good opportunities. I think the S&P, depending on the capital you have available, is still the more affordable of global equities, which I guess is probably why more people trade these markets. We're seeing the pound dollar continue to sell off, so it's likely to support the FTSE 100 if we could get a little bit more of a pullback before we start kicking higher. The low of this market is the 7103. If we get a close above 71.14, we could maybe look at this low here as a potential stop loss. Yeah, it's just a very volatile market, so it does give us some good opportunities when we ordinarily can trade that market. So we have a bit of a plan in this market. So below the 1500 is a good opportunity. So really, that's the level that we'd like this market to pull back to if we can. If we get a constructive pullback to that level, let's see how it's been behaving with that level so far. So you can see it's been a level of multiple kind of support, preventing prices from pushing lower. Even when we got a break, we had a fairly strong rejection of that level. And then once we're below that level, it then provides resistance to the upside. So that's the importance of, I guess, support and resistance. What we can do is we can hopefully be nice and patient, wait for this market to kind of come to this level again. Hopefully fail to make a new high, and then constructively look to break to the downside, maybe from a much higher price. So something like that would certainly interest us. So we're happy to look for opportunities to the downside in the euro dollar. We just got to sort of be patient and just wait and see if we can get that move back to the 1500. And this is where we want these markets to kind of conform with our approach. Now, there is a level in there. Let's see what the low is. Okay, we're not talking about that much, we're talking about 8 pips between current price and the new low. So maybe a bit of patience is probably better with this market just for the time being. Nice strong indecision. So the sellers that wanted to sell this market now have a bit of a dilemma. Does it give an opportunity to the buyers to take this market to the upside, or are the sellers going to take strong control and start driving prices lower? So we're at an important stage for the dollar yen. Okay, it's the 29.84 level, and it might be worth, if we got a breakout of this level to the downside, it might be worth using the 130 level as. Let's look at the daily time frame. We've had a strong move already. Are we likely to see more? Well, yes, you know, potentially. So if we get a close below this level, we'll look to go with some dollar strength. So this market now is getting very close to its breakout to the upside, the 112.87. So I'm afraid we just have to kind of just monitor these trades a little bit more and see if we kind of get a better opportunity. The pound dollar looks like it's extending lower. Okay, so the S&P is threatening to push higher, but we're probably not likely to get a bit of a move in that market until the US equities open at in about an hour's time, at 55 minutes time. what we're probably looking at is sort of stereotypical Monday price action, really, which can often be one of the more difficult days, where there's a bit of, like, the markets open up, traders hit their trading desks, and they look to position themselves for the week ahead, and you can get a bit of up and down, kind of bit of price action. It's not filled with volume, so we're not getting explosive moves. We're kind of getting consolidation, and then we're getting breaks off the back of that. Certainly anticipate the pound to continue lower, so that could be quite a straightforward trade, getting in at that level, placing our stop loss just above the 130 level. So let's see if we get that little breakout as we're watching it. Nothing really has happened in the last 3.5 hours, nearly 4 hours in the dollar yen. So we could very easily just cut this trade and just forget about it. The only thing that there's no real need for us to do that. It's just purely the location of our stop loss. So we've got a couple of strong levels of resistance. So we might keep this for the day. It keeps us involved, and we might get a 20-30 pip sort of move to the upside at some point over the course of the day. So we're just giving ourselves that opportunity. Right, so let's see if this starts to make sense. So if the pound is selling off, and it looks like we're going to get that close below the 29.84. If we do, you see we've now completely cleared this zone here. So the next level is down to 29.40. So does it still potentially stack up for us? Yes, it does. It looks like we're just getting that close now below that level. So if we do, we can look to get into this. Just wait for the close. It's tough for traders to wait for that close, but from a consistency perspective, it's the better thing to do. So now we're getting that close. So now what this market is telling us is, from a technical perspective, is that firstly this market is coming from high to low, so there's a lot of momentum to the downside, but we also have this descending platform, and every time the price gets to that level, it's just applying that little bit more pressure. Now that's what happens when you get a breakout of this kind of downward moving price action. So we've got the market that's moving to the downside. We've got a descending triangle, which is what this is. We've got a breakout to the downside with a bit of momentum, and now what we're looking for is continuation. And if we get that, you're kind of stacking the odds in your favor. And I'm going to just get ready to take this trade now. If we just get a little bit of an impulsive move just lower from here. So I suppose this is the whole approach about being consistent and scrutinizing this entry. and make it conform. And if you do that, what it means is on occasion you might have a certain percentage of, you might be able to mitigate against a certain percentage of losing trades, the ones that fail to continue and to just give us what are called false breakouts. And it's a means in which you can start to mitigate against full breakouts. So let's see if we just get another tick lower. Okay, so let's get into this market then at that price. So there's the this is a slightly more, it's a 21 pip stop loss in this market with the potential for maybe a 1-to-1, 1.5-to-1 movement to the downside. And going back to the analysis, the market is moving to the downside. It's created a bit of sideways moving descending triangle. We got a nice breakout and close below the important level, and then we got some follow through. So for all these reasons, what it means is you can take that trade with a high degree of confidence. It doesn't have to be a winning trade, but it's just the process in which we apply to get into these trades during the session is really what I'm referring to. And if you do this analysis and you take those trades 100 times, you give yourself a very good chance at being consistently profitable with those trades. And then of course there's a whole range of other factors that start coming into play in terms of your risk management. Do you mitigate risk as quickly as you can? Do you book in profit? At what stage do you do that? So the whole management process is now in focus. So we've identified a high probability trade to the downside going with this market move. We would have liked to have got into it a little bit earlier, of course, but that's not to be. So we want to trade the US Open and suggest that this market is very likely to move lower. And we've already assessed that there is scope to the downside in this market. So no reason why we don't get a little bit of a move lower. Certainly where we can book in a bit of profit on the trade. So that's the pound dollar. Well, you could argue you could get into it sort of a little bit earlier, an extra pip or two, but really that doesn't really matter an awful lot. There's just a considerable amount of pound weakness today. Hopefully a bit of a floor is being created here now in the dollar yen. Yeah, Renko, interesting question. Do you have a fundamental view on the indices overall? Yeah, I suppose just sort of history and price action over the last 2 or 3 years has just taught me to I suppose, look for opportunities to buy unless something structural changes, unless there is something profound that's different. Because no one would have expected, I think very few people would have expected these global indices to be at these levels. But like commentators were saying that for like 3-4 years, and the market just kept pushing higher and higher and higher. So it's a really, really good question. And I suppose to answer your question from a personal perspective, fundamentally they can continue higher. Now, I suppose the beauty of being a technical trader is that ultimately that doesn't matter. So I'm not going to just commit to constantly buy, because if we break this level and close below that level, I'd be looking for opportunities to sell. So I suppose that is where some of the benefits of technical analysis can come in. It can decide for me based on data and information that I have, because everything about this market is contained in its price, and if it's looking bearish, then it gives you really strong opportunities to look to sell it. And if it starts breaking structural failures, like this level would be a really strong opportunity to actually take it to the upside. Now we're potentially looking at this level here to see if we can get that pushing higher, because there's a nice move between 27.77 and 28.22, so that would represent potentially a good trade prior to that level. But ultimately, structurally speaking, and from a fundamental perspective, like you've said, I still think that a lot of these sell-offs just give traders opportunities to buy, and I haven't really seen an awful lot that would suggest that this is any different. You know, if we go back to this major sell-off, everyone was saying at that point that the trend to the upside was very much over, and what it did was it created a bit of a floor, and it started the beginning of another uptrend. So the 28.76, you know, we started to break that 28.76 back in August, and we've made a double top now just above that level, but we've hit a high of 29.42. So that's pretty much incredible, and we remember not so long ago, you know, that this price was breaking the 2000 level. So that's the difficulty we've got with these markets. They just keep continuing to push higher. Now, when the correction comes, it'll be significant, and that's why trading, or if you learn how to trade derivatives and contracts for difference, it gives you opportunities in either direction. So do I have a fundamental view? Yes, I do. I kind of personally believe that they'll continue to break new highs again at some point in the near future. Do I trade off the back of that? No, I don't. I want to make sure that at least I do my technical analysis, and like even short-term buying opportunities, I'm happy to get into it on that basis. So and again, it just boils down a little bit more to protecting your capital. If you get into a trade idea, get into it, but mitigate risk. You know, book in profit if you can get to that stage at an earlier level, and just trade them a little bit more actively. And I think that's what these markets are really asking for now, is a bit more active sort of management of some of these trades. So very good question. Personally, I think we'd probably be, as to whether we'll break new highs or not, I'm not so sure. The 29.42, but I certainly think we'll be pushing up between the 28.70 and the 29.42. I could see probably something like this beginning to kick in. You know, like a bit of a kind of a structural failure to begin with, which is significant opportunity number one, and perhaps this market coming back like this and just creating a bit of a movement to the upside, where you could probably draw a line here and say, right, well, now these prices are being supportive. This is a and then that level becomes major importance to the upside, and we look to buy it above 29.42, and maybe we get loads of opportunities to get in at a slightly lower price point. So a couple of opportunities if that's the case, and what everyone will be looking for to see if it happens would be a break to the downside where we create significant double tops wherever those levels will be, and it can give us short-term opportunities for selling between there and there, and then potentially if we get a break at this level, then that's your big long-term trade reversal. So and I suppose the fact that we trade technically, it means that we can trade without that bias taking over, which I guess has helped. Bull market isn't over. Would that be your opinion, Renko? Would you think that we'd be pushing new highs again soon? It sounds like it, Renko. You see, there's a cohort of investors that would suggest that now this market actually represents quite good value again. They were struggling to be buying it up here. Now we've got a nice strong pullback, and there's a couple of 100 points sort of to benefit before we start making new highs. And if you think the bull market will continue, what sort of price do you reckon this S&P 500 could be reaching? Do you think it could break the 3,000 level? Yeah, I'd be inclined to suggest that the bull market probably isn't over. Now, all eyes are on the Fed for increasing interest rates. So what we've seen while the Fed were increasing interest rates, we had the consequences of that were pretty significant for the global equities and global stock markets. Very, very positive for them. And now that the rate increase has started to kick in, we're no longer at all-time lows in terms of interest rates. We're now beginning to increase that, and the Fed are leading the way on that move. We're still seeing upward moving markets. Now the fear and anxiety kicks in because this could be stage one of a multiple set of stages, and that's what people are ultimately very, very worried about. Yeah, so you think there's one last move upwards? Yeah, I mean, time will tell for sure, but you know, very, very possible. You know, what has ultimately changed? Not an awful lot. The US economy is performing well. Interest rates are increasing. They're keeping tabs on inflation. They are very, very low unemployment. The performance of US equities is really strong. There's not an awful lot of reason to suggest that this market could be on its knees anytime soon. Certainly a close below the 27.42 would set the cat amongst the pigeons, in my opinion anyway. And anyone watching this if any buyers are watching this chart and they can see this upward sort of movement and then a really strong explosive move lower, if they see a break of the 2700, then you know, they've got some strong decisions to make. You know, this level here becomes, and that's what we like speculating on, is the battle between buyers and sellers and who's likely to win out. Certainly if the price breaks to 2709, then the buyers are going to have their work cut out to start supporting prices again below that level. So it becomes a very interesting kind of battlefield. I'm sure there's many out there that believe that this market is gonna ultimately move lower, and I think there's fundamental reasons for that to be the case as well. So it's a difficult one. It is a difficult one. But I'd be of the same opinion as yourself, Renko. We'll be looking for these prices to push a little bit higher short term, and you might be right. We might start seeing new all-time highs and at the same time we have to be open to potentially this market just rolling over, and the close below the weekly low of the 27.42 is actually really quite significant for this market. So it'll be interesting to see how it unfolds, but we're definitely looking for opportunities to buy it. As to whether we get those opportunities today or not, kind of remains to be seen. So look, we're getting the pound dollar continuing to move a bit lower, not getting much more movement. A lot of that is probably off the back of the lack of movement in the S&P as well. So we're just sort of flatlining, come off a little bit in the latter part of the European session, bit of strength kicking in. So if we open up and we start pushing higher in the next half an hour, then that could give us further opportunities actually in the S&P. So not a huge amount to work with today, but we shall we'll certainly continue to monitor this trade size. Listen guys, I do apologise. We do need to switch across to the live trade room. I've been wrapped on my knuckles for being late too many times, so I do apologise, but thank you as always for joining us. Perhaps give us a thumbs up if you can, or subscribe to our channel, that would be great, and you'll be notified when we go live. Certainly if you click the bell function as well when you subscribe. So potentially looking to trade a little bit of dollar strength, but we've certainly got indecisive markets really today, broadly speaking. So we'll see if we get another impulse lower, maybe a couple of impulses lower in the pound dollar, and maybe even cut the dollar yen trade if it's not really performing for us. So we'll bide our time. There might be an opportunity shortly as well in the euro dollar, pushing prices lower. So a couple of opportunities beginning to kick in. So let's have another look at this just before I let you guys go. So there's an opportunity to get into another dollar strength trade. Getting a little bit of a pullback off those lows as we speak. So the equities just rolling over a little bit to the downside. So maybe they're just preparing for the US Open pretty shortly. So this is an interesting trade. Just want to check the... Yeah, so the euro is stronger than the pound as things currently stand. So by the process of elimination, we should get a bit more of a run lower in the pound dollar. So we'll stick with that trade. We won't look to add the euro dollar. So we should benefit proportionally from this move lower as things currently stand. And the euro dollar just up there. So look, we are getting this little bit of a move. So there we go, we're getting that nice explosive move lower, so this is good, this is what we want to see. So on that note guys, unfortunately it's probably a bad place to leave it, but we're in a nice bit of profit in the pound dollar, so we do have traders over at the live trading which we're going to need to switch across from. So thanks very much as always for joining us. Do feel free to connect with us through our YouTube, Facebook, Instagram, Twitter and LinkedIn. The details are all there up on screen. And thank you as always for joining us. In the details below there is a description. We're still offering a 14-day free trial. So Renko, if you would like to take us up on that, you're very, very welcome to do so. It'd be nice to see you on the inside as well, and for you to access a lot of trading related resources as well there for you. So on that note guys, thanks very much, do take care, and we look forward to seeing you next time, and do read the details below and give us a thumbs up if you can. From everyone here, take care, bye for now.